The topic that we have to discuss today is risks, threats, and cyclicality. Are we now smarter about the future? The basic question I think we need to ask is, and that's what I'm going to begin with, is are risks now that we face bigger than they have been before, or risks have always been there? They just seem very much heightened now because they're being projected as much bigger. I think we'll begin there, and then we can sort of take time to go through some of the big risks that they get talked about, be it anti-globalization, Mr. Trump, his tweets that we all read. We got oil prices, which is extremely significant for India. We got interest rates, etc. Some of these risks, of course, have been there for a long time. Some may be new. So I think what we'll do is we'll spend about half the time that we have for the discussion on the dais with the panelists, and then we can take questions from the audience as well. So let's start this. My first question is, Abhik, to you. The question is exactly what I began by sort of introducing the subject. Are we in a world where the risks are a lot more than before, or they've been always there? They just seem much bigger now.
Let me try and be as brief as possible without missing some of the things I wanted to say. Clearly, if you look at it from a pure financial markets perspective, this is going to be a far more volatile, and is turning out to be a far more volatile year than the past few years. And this was, I think, predicted by a number of agencies, including the big fund BlackRock and so on. But I think, obviously, financial markets are related to fundamentals, and I think underpinning this risk are a lot of things about which we are not very sure. And whether, some of these global risks that you mentioned, Mr. Trump's view on the world, and how it how the economic relations with the US should proceed. I think there is clearly a bigger risk of the world getting a little smaller and more insular, more inward-looking, and it's not just confined to the US. It's there in China, it's there in Europe, and so on. And I think it's this fundamental risk that we need to kind of grapple with in understanding some of the more superficial risks on top, the froth, which is there in the financial markets.
Nilesh, do you agree with that? Your sense?
There was a WhatsApp joke which most of you would have read. If you are feeling stressed, if you are feeling there's too much of risk, just shut off your smartphone, stop reading newspapers. Stress will disappear, risk will disappear.
Watch TV though.
Only CNBC. The reality is that risks were there earlier, and probably at no point of time in our history we were more capable of dealing with risks than today. In medicines, there were certain diseases which were life-threatening. Today, you don't care about them. Newer diseases are coming, but fair enough, we'll find out a solution to that also. In financial market, we have seen central banks coming and rescuing things. Earlier, Bank of Japan used to rescue Japanese companies. Then we saw US Fed rescuing various institutions. And we have now seen European Central Bank rescuing the entire countries. So why are we worried about? The risks will be there, volatility will be there, but I think we have far better institutional framework to manage those risks.
Briefly, do you agree with Abhik's point that maybe the world is getting smaller in the sense, from an India perspective, it's going to be less receptive of what we want to send out as exports? Just defining it more closely.
So let me put it in a different context. We have to maneuver our way. If US and China is fighting on trade war, can we go to US and say that, look, China exports $280 billion of garments to all of you, including yourself. We are exporting only $17 billion. We have allowed your Google to enter into India. China doesn't allow. We have allowed your Uber to enter into India. China forces it to merge with Didi. We have allowed your Amazon to enter into India, and we might allow Walmart to buy Flipkart. China wouldn't allow that. Now, we have been so favorable to you. Why don't you buy $280 billion of garments from me and $17 billion from China? If we can do that, our job is done. We don't care about the world. We can still get the way we want. Similarly, we have $60 billion trade deficit with China. There's no other country on this planet which has this kind of percentage to GDP trade deficit with China. Now, what are we doing about it? This trade deficit is so large. China and Pakistan have become friends. There are many factors, but one of the factors is China-Pakistan Economic Corridor, which is $60 billion investment. Who finances that? You and me. If all of us stop consuming Chinese goods just for 1 year and gave that money to Pakistan, Kashmir problem will be solved. So can you maneuver things in this volatile world to your benefit? We have to be selfish and we have to protect our interest first. So far, we have been believing in Atithi Devo Bhava. We haven't maneuvered world to our interest.
You are also recommending more inward looking in the sense. I mean, take care of your interest.
Look outside, but protect your interest. There's no, harm in being selfish.
Sure. Pawan, come in on some of the points.
Well, generally, I would agree with that, which is, if the big boys are getting into a fight, I mean, look, our economy is mostly a domestic economy. Our net imports, while matter to some extent, they're not answer moving. So keep your head down, focus on your interests. And on balance, I think we're a very open economy. I mean, yes, there's a trade deficit with the U.S., but it's $20 billion, right? I don't think Trump is, other than a few of the headlines on outsourcing of jobs, etc., I don't think he's losing sleep over our trade deficit, if you will. But I think with China, we do have an issue. And, we have $72 billion of electronic imports. How are we going to solve that structurally? I mean, technology is going to be a big part of what all of us consumes and the cell phones that we have. And we need a strategy to solve those types of issues rather than really, focus on trade wars. I think going back to your earlier question on riskier place, often embedded in that question is this view of economic cycles, right? Are we headed for another downturn of some sort? And I would tell you at least our view, and if you just look at the U.S. as being one of the big drivers of the global economy, you're now 9 years into an expansionary phase, right? So we can all debate whether a downturn's coming next year or the year after or the extent of the downturn. But at least our view is that we're closer to something, to a hiccup at a minimum than we were a few years ago. And just business cycles historically will teach you. And I don't think we probably subscribe, or I personally don't subscribe to the view of now it's all secular growth forever because technology has changed the world. So I think
and you're not talking about financial markets. You're talking about the economic cycle having run
the underlying, yes,
for 8 or 9 years.
And look, financial markets financial markets move much more quickly, and so you can have political events that will drive dramatic outcomes in financial markets that may not impact the underlying economy. But I'm saying if you just looked at GDP growth of economies and what kind of is happening to global growth, I think you are probably in a riskier phase than you were a few years ago. I also think you have a lot more political risk. I mean, you've got strong individuals like, leaders, Trump obviously being the one who's most talked about, the trade wars, et cetera, which I think can drive more risk both for financial markets and economy. But I also do agree, these are all things that, the world has taken in stride. I mean, you could have looked back 5 years and pointed to many of the same risks, and I think no one would have said the next 5 years would have looked like the way they did for the global economy. But I do think if you go out to the medium term, one of the things the election of Trump, Brexit, and this notion has gotten a lot of press, is this disenfranchisement of people, driven in large part by the changes technology is going to drive in the labor markets over the medium to long term, and what does that really mean in terms of the political outcomes in the world, and how do you kind of take that group of people who are going to get disenfranchised, I think is the biggest medium to long-term risk, globally.
I think Pawan has given us an important sort of talking point, which is he's saying that no matter what, according to him, I mean, a downturn is coming. I mean, this bullish phase is run on for about 8 or 9 years, and at some point it'll peak out. Maybe in 2018, 2019, we don't know. I mean, so that's a risk right there. And can we do something to prepare for it? I think we can sort of take that point forward. But Mrityunjay, first thoughts from you. We were talking about, I mean, do we find ourselves in a much more riskier world?
So maybe, I think much has been said. So just to put a little bit of perspective, I think from an economic perspective, the world is at a great point. The US is doing really well. Europe's doing well. It's coming out of the recession. India is growing. Most economies are fairly in the right position. I think for the first time in sort of many decades, this is the real risk sits in geopolitics. So if you look at what we are today facing, and possibly the reason for a depression or a downturn could be things like Russia, US, what's going to happen there, inward-looking leaders. Look at Iran, Syria, North Korea, all flashpoints waiting to happen. And then very, very importantly, I think, if you look at technology is where the real risks are being played out. And at this point of time, there are really two powerful players, or there is in some ways, or some would put it as a Cold War between China and the US as to who takes supremacy in the next phase of technology. 4 top tech companies owned by the US, 4 top tech companies owned by China. And if you look at some statistics of the investments, the innovations, be it AI, robotics, that's where the whole arena is being played out. I think the other area is accidents, and when you look at accidents, one is obviously the risk of war, which can really change the dynamics globally. The second is natural calamities. I think that was there in the World Economic Forum and continues to be an important part for all geographies. India is actually on the top 5 list of the most vulnerable sort of places.